The Australian dollar has had a good week, up about 2% to above 75.5 cents. It has found support from a range of sources, including a soft US employment report, the RBA's more optimistic tone in Tuesday's statement, and Australian GDP data. The US dollar fell against most major currencies after their employment report for May. Payrolls growth was 138,000, well short of the 180,000 expected, and with a downward revision of 66,000 jobs. The unemployment rate, however, was still very low at 4.3%. That was welcomed by Fed officials after the report came out. As such, markets are still pricing an aggressive 95% chance of a rate hike next week. But the question is more about interest rates further out, with markets only pricing 50% or a little less chance of a follow-up rate hike at any time in the second half of this year. Meanwhile, the 10-year Treasury yield on US government debt fell to a 7-month low. Closer to home, iron ore prices are not helping the Aussie dollar's cause, falling to about $55 a tonne this week, a low since October last year. But the Australian dollar rose after the RBA statement on Tuesday. The RBA kept the cash rate at 1.5% as fully expected. But in the statement, it took pains to make clear that it was braced for a soft GDP reading in the first quarter and that it still expected that growth would recover to above 3% over the next couple of years. Australia's economy grew 0.3% in the first quarter, up 1.7% over the year. That's the slowest annual growth rate since 2009. However, the first quarter reading of 0.3 was at least better than some of the gloomier predictions, with some people expecting a negative reading. It was quite close to Westpac's forecast, and we still expect stronger numbers in the quarters to come. In what has been a very busy week for markets, there was less market impact than expected from the ECB meeting and the testimony by former FBI Director James Comey. For the ECB, their quarterly forecasts included lower inflation projections, slightly stronger growth, and overall their tone on policy was only slightly more optimistic. This was received fairly calmly by markets, though the euro did fall slightly. In the US, there was actually a small rise in the dollar as the Comey testimony produced a lot of what we'd already seen in the media through leaks. So markets had been keenly anticipating it, but overall they didn't regard it as a game-changing event. The pound fell very heavily on early exit polls showing that the Tory government was likely to lose its majority and produce a hung parliament. Recall that the pound had jumped very steeply in April when the snap election was called, on the assumption that the Tories would be able to increase their majority. As such, the pound is likely to remain an underperformer in weeks to come. Australia has another busy week ahead in terms of domestic data, including business confidence, consumer sentiment, and on Thursday the highlight, the May employment report. Jobs growth was very strong in March and April, potentially playing catch-up somewhat to other indicators. If we were to see another strong report, it would be very well received by markets. In the US, all eyes will be on the FOMC meeting, where they are widely expected to raise the funds rate to 1 to 1.25% range. But there's going to be a lot of focus on the quarterly forecasts as far as where the economy, inflation and interest rates are seen as going, and also in the general tone of the report and the press conference. So there will be a lot for markets to digest, and we think the US dollar overall comes out a little bit firmer. So for the week ahead, we expect the Australian dollar to consolidate its recent gains rather than going on with it. We expect most trade to be in a 74.50 to 75.50 range, with scope for a test of 76 only probable if the Australian jobs report turns out to be very strong. We'll speak to you next week.